Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a break above the previous day's high, indicating buyers in short-term control, but the larger time frame has not changed at all. We are still balancing within a pretty wide range, and it's still a context where we broke from a pretty established balance area, and now we are establishing a new trading range. So heading into the open, despite the bullish overnight session, our short-term bias is going to continue to be neutral, and that means that the market can still tip to either side. We saw NQ break out to a new yearly high, but again, just because it made that new high on the year does not mean that it has to continue to make new highs. So we do have to watch NQ as well and keep an eye on 48.35. That was the previous rollover adjusted yearly high. So if it is holding above it, then we know that buyers are continuing to be aggressively active in NASDAQ, and that can actually provide a lift to the S&P as well. So given the mixed signals that we're getting right now, with NASDAQ being relatively bullish, but the other markets not really participating and still being within a trading range, we have to approach this market with a very neutral bias where we are open to the upside if there are enough signals in real time confirming that buyers are in control, but we're not just blindly bullish simply because NASDAQ made a breakout attempt. So we are going to continue to maintain a short-term bias that is very neutral, and bigger picture, we know that sellers can still be active at the resistance zones because the larger time frame structure is still leaning more towards the bearish side. So on the upside, we have 43 to 45 pre-market resistance. If NASDAQ can break out and continue above the 48.35 level, then it would set up the environment to support a break in the S&P as well. And above 43 to 45, we have resistance at 50 half to 52 half, and then larger time frame resistance at 56 to 58. And those are still areas where sellers can defend, especially the 56 to 58 area. This week, the main catalyst is the FOMC announcement on Wednesday, and it's just unlikely that we're going to make any major upside move ahead of FOMC. So given the risk that's on the table, most likely, even if we do put in a breakout attempt short term above 43 to 45, we can still attract sellers as we push towards those larger time frame areas of resistance, and then we can start balancing again. So 56.58 is a larger time frame area of resistance. 50 half to 52 half is still pretty decent, but we're going to have to gauge it in real time. On the downside, in the event of a failure at 43 to 45 and a failure to hold above the 40 half high volume node, we can quite easily get a push down towards Friday's high of 34.25, and then the first area of decent support is going to be at 30 half to 32 half. Technically, buyers can defend on first test, and then below that we have initial support 23.25, which is a better area for buyers to defend, and if we're exhausted into it and we're not seeing any major broad market weakness, then keep in mind that we're still balancing within a range over the last week or so, and buyers can be active at the support zones as well. And then in the event of an extreme, we can go down and test the 18 half high volume node and the 12 to 14 half area, where again responsive buyers can be active. So off the open, we're going to keep an eye on 40 half and 43 to 45 in the S&P. How the market responds to those areas is going to help set the tone and bias on the day. And keep in mind that in order to break out above 43 to 45, it is going to take broad market strength, which means a uptrending and bullish advanced decline line, and some pretty decent momentum, which means the NYSE tick holding above zero and printing some decent values. And then we're also going to want to see NASDAQ holding above 48.35, which was its previous yearly high, in order to get that buying in the S&P as well. And then absent any of those things, it's just going to make it quite difficult for ES to sustain a breakout above 43 to 45. And we know that from a location perspective, this is still valid resistance until broken. So we do want to be cautious on buying 43, 45 unless it is indeed a legitimate breakout with broad market strength and sustained upside momentum. At that point, location becomes irrelevant because it is a momentum trade. So those are the main ideas heading into the open. That's really how the market is set up. Let's see how it responds to 43 to 45 and the 40 half HVN, and we'll take it from there.